The Commodity Channel Index, or CCI, is a great indicator for finding out when the market is getting overbought or oversold. It is a momentum-based indicator that shows the difference between the current price and its average price over a period of time. If the CCI moves above plus 100, it means that the price is above its average and may be overbought. So this could be a signal to start selling. On the other hand, if the CCI moves below minus 100, it means that the price is below its average and may be oversold, which could be a signal to start buying. But remember, the CCI can give false signals, so it's best to use it with other technical analysis tools to confirm the trend. One way to do this is to wait for the CCI to cross above plus 100 for bullish momentum confirmation or below minus 100 for bearish momentum confirmation. You can also align this with the trend direction for higher probability entries. Want to practice using the CCI indicator in real market conditions? Sign up with Innohedge Limited today and get a seamless trading environment. Sharpen your technical analysis skills with live charts and practical execution.